Hi, welcome to Dorchester Advisors. Today I want to talk about the financial markets in the second quarter of 2024. I think you'll find some of our insights useful. Now, in case we haven't met before, my name is Dushyant and I'm the founder and managing director at Dorchester Advisors. Here, we work with individuals and families and help them create solid retirement portfolios that will give them enough income throughout their retirement. So what happened in quarter two? Well, the financial markets continued to make good gains in quarter two. Now at Dorchester Advisors, we follow 5 main asset classes: cash, bonds, equities, real estate, and commodities. Pretty much the entire investable universe available to professional investors. Now, 4 of the 5 asset classes were higher in Q2. Only real estate was down, and that too mildly. The big winners were US equities and emerging market stocks. In the bond arena, the winners were the very short-term bond funds. Now, the mix of leaders and laggards, winning and losing sectors, changes each quarter, and that supports our basic thesis that portfolios that are well diversified are an attractive investment strategy. And for high net worth investors, we believe that equities are the better choice for increasing their wealth after inflation and taxes. Hence, our bias towards equities in client portfolios. In quarter two, the media headlines focused on political events. Now, so many investors believe that political events influence financial markets. While this may be true in the very short term, over the longer horizon, their impact, both positive and negative, tends to even out and leaves market marching to a different drummer, the drummer of fundamentals. Things like interest rates, profits, earnings, revenues, those kind of things. And since we and our clients are focused on the long term, that is what we pay attention to rather than the short-term media events. Now, having said that, I do believe that in 2024 we will see a slightly higher volatility, mostly due to the elections, but I think this will settle down quite quickly. Now, the other headlines in quarter two included things like the solar eclipse, the university demonstration, for example, in Columbia University, and of course the Trump trial and its related legal drama. But from an investment perspective, I also noted that the Dow Jones index hit 40,000 for the first time in history. It's also noteworthy, at least I found it noteworthy, that the Dow is not overpowered by the Magnificent Seven or technology. It's balanced, and that gives some reassurance that there's a broad market trend happening. Now, as a student of financial markets, I observed that media seems to pay more attention to market declines than it does to increases. Certainly, declines elicit a fearful response, and fear sells newspapers. Yet, the history of about 100 years shows that although the markets decline from time to time, these declines occur in about 26% of the years. But this also means that 74% of the time, stocks are up. And I believe successful investors focus on this 74 and not the 26% of years where there might be a decline. So our investment philosophy for high net worth investors with a long-term horizon remains steadfast. We are not seeing any new concepts, data, or thinking that causes us to believe otherwise. So our game plan is to keep diversified portfolios, keep them diversified over the 5 main asset classes, keep a bias towards equity, and keep a relentless focus on managing costs. We think this is a very feasible strategy and will help to assure a comfortable retirement for most of our clients. Certainly, I'm comfortable investing my assets in this manner. Thanks for visiting us and listening in. I invite you to look through our website, and if our philosophy and approach resonate with you, hey, give us a call. I love talking all things investing. Thank you.